Hello, everyone. Welcome to another trader interview. I'm here today with Zamco. Zamco has done over 100K in withdrawals from Quant Tekel alone, which is absolutely insane, and like $250,000 in withdrawals, like overall. So welcome, bro. Like we're really interested to hear how you were able to do this and like how your journey was. So welcome. Thank you for chatting with us, man.
Thank you for having me.
How did you kind of get introduced to trading? How did that whole journey start?
So I got introduced to trading through a college friend. I've known him since primary school, and he introduced me to IML, which is like, you're probably familiar with it. It's like they teach you how to trade, but then there's also like an affiliate pyramid scheme, and so that's kind of what got me introduced into it. Obviously, I found out very quickly that they're not really here to like teach trading, and figured that out very quickly. And then that led me to actually want to learn how to trade on my own. So I started researching on YouTube, Instagram, and just looking at random videos, just building up an idea of what trading is. And then I created like a demo account and just started practicing. And this was 7 years ago. And now I've been trading for 7 years so far. And for 6 of those years, I was unprofitable until just maybe, I think 9-10 months ago when I became profitable in April. That happened right after I got married. So once I got married, things must have changed psychologically or something. And then suddenly I became really profitable.
Out of interest, do you think that psychological change when you got married was something to do with kind of like looking to the future rather than trying to like make a quick buck maybe? Did that have something to do with it, maybe? I
think it's more to do with I became more accountable, self-accountable for a lot of things, because before being married, I wasn't accountable for anything, you know? I could do whatever, no consequences, but as a married man, you have to be really self-accountable for everything that you do, and you're responsible for someone else. So you take more thought before doing something. So I guess that translates into trading, where I would actually think more before entering a trade, be more accountable if it goes the other way, and try to look at where I went wrong and really try to fix that, rather than just blame the market and just continue, because you really need to be self-accountable.
Yeah, you're not just trading for yourself anymore, you know, and you can't be super reckless anymore, because there are other people you're kind of accountable to as well, like you were saying. In terms of like your journey before then, what was your kind of progression? You know, you started with IML. It was like, you know, obviously the whole marketing aspect of trading, influencer marketing, when it comes to trading is pretty prevalent in the space, obviously, and you know, not everybody that trades is super legit, and so to find, you know, actual proper information and actual proper people in the industry to follow is difficult. How did you navigate like learning everything you needed to learn to kind of get to the point where you were at, where just after you got married, you know, started to get profitable?
I think a lot of it was trial and error. I failed a lot all throughout the way. I tried a bunch of strategies, whatever I could see on YouTube, like, oh, we have this golden ratio, the Fibonacci, let's try that, and trend lines, let's try that, support resistance, try that. None of them worked for me. I understand they do work, but for me, it just didn't work with me. And I went through a lot of random influencers on Instagram, trying to see who's legit, who's not, who's just flashing the Lambos and stuff, and who's actually teaching. And then slowly through trial and error, I started finding like more reliable people. However, that didn't help with my strategy, but it was nice to see their strategy working, and you know, you can see that they are real traders, it works. So I guess it was just a lot of trial and error. And then over time, bits of information from different traders, different strategies, it just started compiling, and as I kept trying out on the markets, I sort of built my own strategy around it, just picking bits and bobs here and there from what works and what doesn't.
Would you say that was actually more beneficial than just trying to copy somebody completely verbatim, trying to adopt somebody else's strategy? Are there like pros and cons to kind of workshopping a strategy rather than just copying somebody else's?
I think there's definitely pros and cons. The pros would be that the strategy is your own at the end of the day, because it has to work with who you are as a person. So you can't just copy a strategy and just expect it to work with you, because it has to suit your personality, how you think, how you go about things and react and whatnot. So that's the pro. You really build something for your own personality. The cons would be time. If you had followed a specific strategy and just learned that, maybe you could have learned that strategy very quickly and just kept repeating that in the markets. But the cons would be that, again, it's not your own strategy. It's not suited towards your personality. So I think that's the pros and cons. The cons, takes too long. Pro is your own strategy that suits your personality.
A lot of people will say that psychology is probably their biggest problem when it comes to trading. And then obviously there's a whole other camp of people that say that if you don't have a good strategy, then the psychology is a waste of time. But I would say that it's a combination of the two, and they work together, because elements of your strategy can compensate for your psychological problems that you have, right? If you struggle with revenge trading or fear of missing out, well, maybe just take one trade a day. Like, then you've got time to reset. You've got time between trades so that you don't go on tilt on the next trade that you take. You've got 24 hours to kind of come down from this emotional high, whether it be winning or losing. So I think that that's part of what you were talking about, right? Developing a trading strategy that suits you, helps you navigate the psychological problems that you might have around trading, because when we come into trading, we all have unique hurdles that we have to get over, because we're all different. If you can implement protocols that you follow within your trading that kind of allows you to navigate those problems best you can, I think it can make things a lot easier. When you started trading, in your example, kind of what was your biggest hurdle, maybe psychologically, that you faced when you were trying to become profitable?
I think even till this day, I struggle with these three things, which is greed, fear of missing out, which I guess ties into greed, and revenge trading. So again, that's all FOMO, I guess. It all comes down to fear of missing out and greed. I still struggle with it. It's better than what it used to be. I think I still struggle with it. However, the strategy that I've built for my trading, I think it complements those elements of my personality. So I go for high risk reward trades, but that helps the greed part, because I know I'm getting quite a lot of money from a small trade. That's kind of how I've gone about going past the hurdles, which is my strategy kind of complements my tendencies for greed.
I'm curious, your kind of strategy look like. How would you kind of describe the way that you approach the market? Is it kind of like a smart money based concepts strategy? Are you looking at support and resistance? What kind of factors are you looking at before hopping into a trade?
So for one, I start with the higher time frame, look at the general bias, which direction are we heading in. When the new daily candle opens, I see if the daily low or the daily high is being made. So for example, if we're pushing bullish, when the daily candle opens, if there's not much of a top wick and making a bottom wick, that tells me potentially this is where I should be entering in for buys, so that the candle can now flip bullish and continue up higher. So I'm following market structure. But then for entries, I look for areas of liquidity, which is the Asian highs and lows, or double bottoms, double tops, and then any inefficiencies, so fair value gaps. So liquidity sweeps into a fair value gap, get a market structure shift into the direction that I'm anticipating, and then kind of base my entry based on that. So liquidity and fair value gaps and market structure.
Like you said, you kind of got to that point by kind of workshopping a lot of different strategies and concepts together. What's your thoughts around that? And would you say that you're less of a follower of him and more of just the concepts themselves?
Well, I think with ICT, it's a very specific strategy. Like, he has kill zones and like specific times where you have to see the specific candle at the specific time. I don't really follow any of that. Fair value gaps are simply inefficiencies in the market. These have existed way before ICT ever noticed them. So large areas of movement where there's gaps in the market, that's inefficiency. So that's not something that I really follow in terms of with ICT. It's just basic inefficiencies in the market and market structure.
Would you say that the way that you trade is, in terms of like getting into a position, is it pretty mechanical, or do you use a lot of like kind of discretionary elements and kind of intuition to get involved in trades or not?
My strategy itself is quite mechanical. However, my biggest wins usually are discretionary trading. The mechanical aspect is a liquidity sweep, having a market structure shift, and then entering off a market structure shift. However, sometimes before we even get the market structure shift, I can just tell based off how the candles are moving as they take out an area of liquidity, and I just buy in or sell in straight away based off just the 1 minute candle closure, just anticipating a market structure shift. And the reason I can do that is because I've studied the 1 minute time frame for years. So I kind of have an idea of at what time does this pair move around, how does it move, how do the candles close. You kind of build an idea of that. So I guess that's a lot of there's intuition in that. It's a mix of mechanical and discretionary.
And you said that you like to hold trades for longer. Do you generally hold that trade and then take the full profit off at a particular point, or do you partial out of those trades? How do you go about managing your position?
So one thing about me is I never take partial profits ever, because again, that's the fear of missing out. If it continues without me and I've already closed half, technically to me I'm not in that position how I should have been. Like, I'm missing out on potential profit. So I do take full profit at key levels, so previous daily highs, areas of like higher time frame fair value gaps, just more higher time frame areas of major structural highs and lows. That's kind of where I take my profits.
Where do you kind of look to protect your position and go break even?
If we have a market structure shift after my entry, so we've tapped into my entry, now we've shifted structure again, we had a break of structure, and I've seen that any sort of inefficiency that's around my entry has been tapped into and we've rejected it, and there's no more inefficiencies, then I can make a break even. Because then the market doesn't really have a reason to come back to that inefficiency area because it's been tapped into.
With your trading, do you kind of make use majority of the time prop firms, or do you dabble in like having personal broker accounts at all? Because a lot of people just go directly to prop firms and stay there. I'm one of those people. The leverage that you get from them is just not something that I've found anywhere else. And in fact, like, I find it harder to be profitable on a normal broker account. Do you agree with that, or do you dabble in both?
I dabble in both, but I definitely make much more in prop firms. With my own personal capital, I tend to really just do account flips, like turn £1,000 into like 10,000 or something, and then just withdraw like most of it. That's kind of what I do on my own personal capital. However, I'm seeing more success in prop firm trading because I think about it this way: if I'm trying to flip this £1,000 account into 10,000, I can make that in a single trade on a prop firm account. So why bother risking £1,000 when I can risk a tiny bit just for like a challenge account and potentially make all of that in one single trade? So I'm starting to move to more prop firms and not really bother about personal accounts.
Yeah, exactly. And in my opinion, there's a lot more risk on the table. Like, if you're trying to flip £1,000 into like 10,000, 5,000, you're going to lose quite a few £1,000 along the way, more than likely. Whereas trying to pass an evaluation, and once you pass that evaluation, you can probably keep that for quite some time, get quite a few withdrawals from it. So the leverage there is crazy, in my opinion. And also the mindset around that just seems easier than trying to literally make, what is it, like 2,000%, It's crazy. I would rather just make 4 or 5% on a larger amount. It just feels easier on your psychology. Your whole way of thinking is adjust. In terms of prop firms, like, what would you say that people struggle the most with prop firms? Because a lot of people treat them like casinos, right? And just sink a ton of money into them. What would you say is their biggest problem, and how would you go about like changing your mindset so you can be more successful when you trade with prop firms?
I think when you approach prop firms, you need to understand how prop firms operate. So you need to understand the leverage that you actually have over the prop firms. People think that because they've bought an account, I need to try and pass and make as much money as possible. They don't realize the amount of money they can actually make by risking very little. So I think that's where people go wrong, where they want to try and make as much money as they can in the first withdrawal, or even just try and pass as quick as possible. And that's where they kind of mess up, because if you're trying to go big straight away, you're opening yourself up to more risk, which again, you're probably going to lose. So if you play the prop firm game against their rules, for example, you know their rules, so you go about it differently. So you need to understand what their rules are and why those rules are there. So you just need to play them at their own game. In terms of the challenges, what people tend to do is they risk very little. What I do to pass challenges is I risk a very big amount, 2 to 3% a trade, just because I just need a 1 to 2, 1 to 3, and that's it, I've passed phase 1. Same for phase 2. It's you can pass very quickly, but people take their time to try and pass very, very little, just risking 0.25. You're wasting a lot of time there. And then they go into drawdown, and that's where you mess up your psychology. They're in lots of drawdown constantly, and that plays on your mind. So if you just get through the stages very quickly, then you don't have that stress of slowly trying to build it, because that plays on your mind. I don't think many humans have the capability to be in that drawdown for a lot of time and remain patient and calm. So I think passing through very quickly is the best way to do it.
Yeah, I 100% agree. I think that's the trap that a lot of people fall into, because they're trying to risk small amounts, 0.5% per trade. And 3 months down the line, they're still on phase 1, and they're like, no way am I going to spend another 3 months trying to pass this, and then I still have another phase. And then what ends up happening is they go on full tilt, and then they try to risk everything, and then they end up failing and messing up a rule. So not only did they fail, but it took them 4 months to fail. And so it's you had a bigger chance to pass if you just risked a bit more. And at least, you didn't lose that time. It's counterintuitive. And some prop firms have kind of cracked down on this, because they've noticed that people have more success by passing by risking slightly more, which is understandable to some degree. Prop firms try to, a lot of prop firms actually monetize the data behind traders now, and in order to do that, they need traders that are somewhat consistent. So that makes a lot of sense. And there was a point in time when people were scared that the prop firm industry wasn't going to be around anymore, and I think we're well past that now, and it stood the test of time. In your case, especially with prop firms in particular, what is your plans for the future? Are you looking to get more funding? Or are you looking to kind of create more personal accounts and trade those, perhaps with smaller risk? What are your goals for the future with prop firms and trading in general?
As of right now, my goal is to attain more funding. I'm currently at 1.3 million. I'm trying to push for 2 million, because I've kind of now talked to myself, and I was thinking, okay, if I make 2% a month across my accounts, that's $80,000. Obviously before the profit splits, but about $80,000 a month just making 2%. That's not difficult at all. Just to make that percentage in a whole month. And if you think about it, that's 1% every 2 weeks. I can risk very little and make 1% every 2 weeks, and I'll be hitting 80,000 a month. So that's my goal right now, to reach 2 million in funding.
That's wild, man. Yeah, I mean, that amount of funding is something that a lot of people find as almost an unattainable goal. What would you say to people that sees 7-figure funding and thinks that it's not possible? What would you say is the best way to get into that mindset of making something like that happen?
I think the people that would think that is unattainable are the people who've never had a payout. Once you get a payout and it becomes real to you, I think it's very easy to then use that money to buy a challenge and pass it again, because you've already done it. You've got the proof that you get paid. It just changes something in your mind. I think once you get payouts, once you even get a single payout, you know it's real. I can do it, and then you just repeat, rinse and repeat again and again, and then it just really just snowballs very quickly. I didn't ever think that I would have over $1 million in funding, but I retained that. There was actually like 2-3 months ago, I lost almost all my funding. I was down to 200k, and within a week, I passed all my phase 1s, and the next week all my phase 2s, and I was already at 1.3 within like 2 weeks. I think once you get the payouts and you get that experience of passing the account, getting the payout, you just do it again. It's literally, it just changes something in your mind. You just do it again and again.
It's something about momentum, you know, like, and people put that payout kind of like on a pedestal. They think it's an unattainable thing, and even if they say they believe in themselves to some degree, it seems like kind of like a pie in the sky type of concept to them. But and a lot of the time people are trying to be greedy, right? They're trying to go for those big numbers right off the bat. This is unlikely to happen. If they were a bit more conservative and went for just a small few $100 payout to begin with, their brain then starts to realize that this is actually something that's real. That goal comes off the pedestal, and all of a sudden things snowball and compound super quickly, and next thing you know, you're at like 1.2 million. So like, again, I relate highly with your journey. I mean, just the other day I was earning like next to nothing, and I would have given like anything to just get like 50k in funding and make a few $100. And then also, you know, managing to get past the 7-figure mark, absolutely insane. But at the same time, you know, it's like a blessing and a curse. We're always looking to get more. And you sometimes have to remember kind of where it all started. And just the other day, I would have given anything to make a few $100 a month consistent. Big ups to you, man. You've done so insanely well so far. And a lot of people probably find your journey extremely inspiring. So thank you for chatting with us today, man.
No problem. Thank you for having me on.